Today we will discuss about preparation of financial statements. Okay, first of all we have to understand what are financial statements. Remind one thing, never skip the concept because conceptual learning is our first objective. Okay, coming to the concept, financial statements. So financial statements are the reports that summarize the financial transactions of a business. So financial statements are the reports that summarizes the financial transactions of a business. These statements are prepared to provide information about the financial performance and position of the business to various stakeholders such as investors, creditors and regulatory authorities. The financial statements include the following. So what are the financial statements? Financial statements are the reports. What it contains? It's a summarization of the financial transactions of a business. Okay, so who are the users of financial statements? Stakeholders. So who are they? Investors, creditors, other regulatory agencies, it means authorities, income tax authorities, etc. Okay, so what are the financial statements include? Income statement, that means profit and loss account. Number 2, balance sheet. Number 3, cash flow statement. So these are the financial statement generally include. Now we go to concepts. While preparing financial statements, we have to follow some concepts. Okay, so what are they? We have to understand in detail, then only we can do any problem in exams and in MNC companies also. Okay, first concept is accounting equation. Okay, accounting equation. What is the accounting equation? We know assets equal to liabilities plus equity. Okay, the accounting equation is the fundamental concept in accounting and expressed as assets equal to liabilities plus equity. This equation represents the resources owned by the business, assets, and the claims against those resources, liabilities and equity. So what is the accounting equation? Assets equal to liabilities plus equity. That means resources owned by the business. What are the resources owned by the business? Assets. For example, machineries, furniture, investments. So those are all the assets owned by the business, and the claims against those resources. Claims against those resources. So these are the liabilities and equity. So liabilities are the outsiders. So equity means shareholders. Okay. Next, second concept, accrual basis accounting. We follow accrual basis accounting while recording financial transactions. Accrual basis accounting recognizes revenue and expenses when they are earned or incurred. So we know the accrual based accounting concept already discussed. Okay, so accrual based accounting recognizes revenue and expenses when they are earned or incurred, regardless of when the cash is received or paid. This approach provides a more accurate picture of the financial performance of a business. Okay, this approach provides a more accurate picture of the financial performance of a business. Next, third concept, going concern. The going concern concept assumes that the business will continue to operate for the foreseeable future. This concept is important in preparing financial statements as it ensures that the financial information presented is relevant and reliable. So what is the going concern concept? The business is continues to operate for the foreseeable future. then only we have to record these transactions for the future period also. For example, if you buy a machinery for 10 lakhs, the useful life is more than 5 years, then we have to recognize based on going concern. Then we expect the business is going more than 5 years, that means foreseeable future, then only we have to record as per going concern. Okay, next. So materiality concept. Materiality refers to the significance of an item or transaction in terms of its impact on the financial statements. Items or transactions that are material should be disclosed in the financial statements. So while preparing financial statements, we have to record material items, that means materiality items, that means which have significance an item or transaction in terms of its impact on the financial statements. For example, some laborers work effectively and efficiently, so we record their production, not their sacrifices. Okay, so it is a materiality. We have to record how much they produce, not they sacrifice family time. Those are all we don't record in financial statements. Okay, in concepts we have covered clearly. Okay, next, income statement. So what is the income statement? The income statement reports the revenue earned and expenses incurred by the business over a specific period of time. So income statement reports revenue earned and expenses incurred. So we have to differentiate revenue earned and expenses incurred by the business for a specific period of time. Okay, specific period of time. The income statement is prepared using the accrual base of accounting. We have to follow accrual base of accounting. The following is the format of the income statement. So generally this is the format of income statement. So what is the first? Revenue minus cost of goods sold. So we have to get gross profit. Revenue minus cost of goods sold equal to gross profit. So from gross profit we have to deduct operating expenses. Operating expenses, we get operating income or earning before interest and taxes, that means EBIT, operating income. From operating income we have to deduct interest expense, then we will get earning before taxes. Okay, EBT. After that we have to deduct income tax expense, we get net income. So this is the simple income statement. First of all we have to learn conceptual understanding, then we can easily do problems in exams as well as in MNC companies also. We can easily understand financial statements. Okay, so this is the simple format of income statement. For example, ABC company has the following information for the year ended December 31st 2022. So revenue how much? 5 lakhs. Cost of goods sold 2 lakh 50. Operating expenses 1 lakh. Interest expense 20,000. Income tax rate 30%. Calculate the net income of the ABC company for the year ended December 31st 2022. Okay, so solution. First of all, revenue 5 lakhs. We have to deduct cost of goods sold 2 lakh 50,000. Now we will get gross profit 2 lakh 50,000. From gross profit we have to deduct operating expenses 1 lakh. Now we will get operating income 1 lakh 50,000. Okay, From that we have to deduct interest expense 20,000. Now we will get earning before taxes. How much? 1,30,000. Now we have to apply income tax expense rate. How much? 30%. So 39,000. Now we will get net income 91,000. So this is the simple solution for that. Next, entries. How do we record entries for this? To record revenue in income statement, accounts receivable asset debit to revenue account. So this is the record revenue JE journal entry, accounts receivable account debit to revenue account. Why we debit accounts receivable? It's a asset. Next, we have to credit revenue account because it's a revenue income. Next, to record expenses, we have to debit rent expenses, that means expenses account. We have to credit cash account, that means cash goes from the business. Okay, expenses account debit to cash account. Next, to record depreciation, it's a non-cash item, depreciation. So what is the entry? Depreciation expense account debit to accumulated depreciation account. We already discussed accumulated depreciation in schedule. Okay, next, balance sheet. Now we go for balance sheet. So the balance sheet reports the assets, liabilities and equity of the business at a specific point in time. We have to remember at a specific point in time. So balance sheet reports the assets and liabilities and equity of the business at the specific point in time. The balance sheet is prepared using the accrual basis accounting. The following is the format of the balance sheet. It also prepared on accrual base of accounting. Next, so simple format of balance sheet. Assets. So what are the assets? Current assets, cash and cash equivalents, accounts receivable, inventory, non-current assets, property, plant and equipment, intangible assets. So ultimately total assets. These are the total assets. So each and every concept we have discussed in balance sheet schedules and income statement schedules. Okay, each and every concept means the entries and treatment, meaning and overall concept. Okay, next, liabilities. Current liabilities, accounts payable, so other liabilities. After that, total liabilities. So here total assets equal to total liabilities. Okay, so these are the income statement and balance sheet. Here not written total liabilities. Okay, equity also not written. Okay. So this is the preparation of finance statements. We will discuss problems after complete understanding of the each and every element of the income statement and finance statements. Then only we will discuss about problem. Okay, subscribe, share, like. Thank you.